What do you do with the Bitcoin besides it just gather value?
Real estate developers in New York City, they're not buying the real estate because they want to live in it.
But like most of the people who are buying assets at some point want to sell the assets at a profit.
People that use fiat currency as a store of value, we call them poor. We call them poor. People that use fiat currency, we call them poor. We call them poor. We call them poor. We call them poor. There's a name for them. We call them poor. We call them poor. Okay? Right, like, the point is, if you have the superior asset, it's going up forever, Laura. Forever.
Right, but I mean, we can all look Bitcoin sort of as...
Forever, Laura. People that use fiat currency as a store of value, we call them poor. We call them poor. People that use fiat currency, we call them poor. We call them poor. We call them poor. We call them poor. There's a name for them. We call them poor. 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 Okay.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks came off session lows on Friday as investors weighed bearish consumer sentiment data and odds that the AI investment boom will pay off while monitoring the ongoing US government shutdown for any signs of an end. And yeah, stocks were actually deep in the red to start the day off. Around midday, we put in a low and we saw a rally, a broad market rally. I mean, if you just exclude this part of the market right here, so kind of like this section here, sort of being tech, big tech, software, infrastructure. The rest of the market was actually really green. Financials, particularly asset managers, they're about 15% off their highs. The market saying, hey, these earnings for these companies are at record highs, time to buy. We saw roughly the same here with healthcare, energy, basic materials, utilities, real estate, industrials. Some of the bigger names did take it on the chin. Tesla, after its shareholder vote, was down 3.68%. Google was down 2%. Meta was actually slightly in the green, and so too was the rest of comm services. Software was mixed. There were winners, there were losers. AVGO was down and most of semis were actually down. Nvidia was flat. Microsoft was flat. Oracle was down 2%, and then infrastructure, ex-Oracle and Microsoft was actually very, very positive. Amazon gained here as well, and then Apple somewhere in between. All in all, most sectors did gain. You could see everything from staples, energy, utilities, real estate, materials, financials. Even gold was up 0.61%. But SPY was roughly flat, and that's because we look at the XLK, the technology sector, and the XLC, because of the weights these companies have and these sectors have in the S&P 500, it was pretty much flat. But we did see a broad market rally, breadth expand, and this was particularly true in the small cap and mid cap region right here. Now, don't get me wrong, we actually saw positivity through and through. Large caps did gain. However, we saw outperformance here in smalls, outperformance here in mid caps, particularly value and core. They were both up in excess of 1.2%. Growth participated, mid caps participated. This is exactly what you want to see coming off lows. If we can come off the lows, breadth expand, but participation everywhere, that's a healthy market environment. And it's indicative of the market putting in a low, sort of resetting expectations and then going higher from there. But it's not all good news. A big part of the reason why we saw today's green day was because we actually had like a pretty terrible week, and we probably saw like some form of a short covering rally, dip buyers waiting in. But The government shutdown is not getting any better. Democrats laid down conditions for a deal to end the government shutdown. The market initially rallied off that, but the Republicans rejected that proposal. Democrats suggested including a 1-year extension of expiring healthcare subsidies in legislation to reopen the government. And this is ultimately the fight we're having right now. Democrats are pushing for the Affordable Care Act subsidy extensions. Republicans are seeking program cuts. Trump came out and suggested maybe we should give this money back to the people for them to choose their own health care. Senator Kennedy came out and said the shutdown could last 10 more days, 2 more weeks amid the ongoing Obamacare dispute. Right now, we're seeing domestic flights across the U.S. are set to be significantly disrupted. Something like 1 in 10 flights are set to be disrupted as the ongoing federal shutdown standoff continues. So we'll see where this goes. I mean, the longer this government shutdown goes, I think we are going to continue to see a little bit of volatility in the markets because ultimately, it's pretty simple what's happening. When the government is shut down, the Treasury cannot spend. That means the Treasury General account, this account right here, keeps rising. When the Treasury General account rises, it's effectively a liquidity drain on the market, right? Because this account is growing in dollars. That's money being pulled from the economy, from the market in large. But once the shutdown ends, we should see the TGA move lower. That's going to be a liquidity boon, and all that liquidity comes flooding back. And then we should see risk assets rise. But that's all going to be dependent on when the government actually reopens. I mean, there's politicians saying mid-January for the government shutdown. Some are saying 2 weeks, 10 days. Who knows? I think we should get a deal sooner rather than later because it is going to hurt people and families in the near term, and we don't want to see that. But looking at the market as a whole, one of the craziest things I saw today was Opendoor. Now, they released their earnings right now. They posted actually not that great earnings, right? Wider than expected profit losses. Revenue was not that great. However, the turnaround is underway. Now, the stock was down 25% here at the open, but after the announcements of the warrants, K, A, and Z warrants that will issue, the stock rallied back to even on the day, up 24%. Absolutely insane. In fact, up here in the after hours, I think the stock is probably going to go to $10 after everything that happened on that earnings call, maybe even higher into 2026. Very bullish. I actually opened a very small position in Opendoor as well as BETR just to be a part of the community that's actually turning this company around. Very, very insane stuff. Tesla stock was down 3.68% after Tesla approved a $1 trillion pay package for CEO Elon Musk on Thursday, setting high targets for growth in the EV maker's market value. Musk is also being asked to deliver on his promises for robotaxi and Optimus humanoid robots, the hardware side of the AI boom. Tesla stock was down, but if Musk hits these targets, right, you're looking at a company that's going to be worth $8 trillion. That's literally an 8x from where we are right now. And then Iris Energy, ticker symbol IERN, was down 6.84% on the day after missing on revenue. It beat on earnings. However, the guidance was actually really, really good. The average analyst is expecting $1.2 billion in revenue in 2026. The management team came out. The CEO, Dan, said they expect $3.4 billion. So I think you're going to see the stock rally. I think it probably goes to $100 if we believe what management is telling us. That you can see in the after hours, the stock was up 2%. So I think this is a great buy. I've been talking about iron for a while now. I will talk about it more on the charts. And then for everything we saw today, it was 3,500 advances, 2,700 decliners. We saw net inflows in the New York Stock Exchange, guys. You can see right here, outflows in the S&P, in the Nasdaq 100, but the S&P 500 pretty much flat. But yeah, putting in a bottom here, and then you see the S&P rallying to finish positive into the close. Very strong dip buying. It wasn't just dip buying at the lows. It was dip buying and then followed through into the end of the day, closing pretty much at the highs of the day. Looking at market momentum, we could see again improvements from yesterday into today. Definitely improvements on last week, as you can see, for these averages. However, we still see that we are below the 50% mark, and that's telling us in the shorter term, things are still looking a little bit wobbly. And then the 150-day and 200-day, the longer term, things are still looking good. So buy for the long term, sit through the volatility, ultimately buy the dip. Now, guys, looking at the charts right here, you can see the Nasdaq 100. So, big tech was down 0.28%, but every other sector did gain here. Mid caps, small caps, the equal weight, high beta, the Russell 2000, very, very solid move. In fact, these names outperformed the Russell, the equal weight, mid caps, right? Outperformed the S&P 500 and the Nasdaq 100. Very, very interesting day of trade. Internationally, we saw mixed stuff. Europe was up, China was down, India gained. Mixed price action. Crypto was actually very positive here on Friday. We'll talk about it. This is actually the Saturday trading price. That's why we're down. But crypto was actually very, very bullish. Actually, crypto was telling you the market was going going to bounce because it was leading stocks ahead of that low we put in on midday. And then looking at some of our other volatility parameters right here. So we see yields did tick up ever so slightly, nothing crazy. The 10-year yield, back near that 4% range right there. The dollar was down ever so slightly. TLT was down, gold gained, silver gained. Pretty much the price that actually you would expect in a market that sort of bounced off the lows. Now, looking at the weekly chart, you can see here the S&P 500 is down 1.63% for the week. So pretty ugly week. If we look at the Nasdaq 100, the Nasdaq was down 3.09% for the week. So absolutely insane move right here. But the weekly chart continues to tell us that there isn't anything really to worry about in this market. I mean, even if we are to pull back to this 6130 area right here, let's say we had to continue to have this move lower, even if we were to pull back here and find support, this is ultimately where I would still be constructively bullish. Why? Because we use it as resistance right here before the tariff tantrum move. And then we do know that once resistance breaks above, it becomes support. That's why we should find support right here. So until we actually get to the 6130 area, that's where I become, I get a little bit anxious or nervous, I would say. But if we find support right here, and we will continue higher. If we do break below, that's where things become a little bit dangerous. However, we're nowhere near there. And if we actually take a measured move, right, from where we finished the week to where we are right now in the S&P 500, it's about an 8% move to that area right there. And the weekly chart is still telling us that things are looking really, really good. And you see this wick right here on the weekly chart. This is telling us that dip buyers came in a very, very big way at the lows. And if we hop on the daily chart, we can definitely see that. This is the Friday wick right here, closing just above yesterday's lows. But the truth of the matter is we are still in a technical daily downtrend, right? And we probably need to see confirmation of the support area on the daily chart. So probably what you want to see next week is Monday, Tuesday into Wednesday. If we could sort of like hold this level right here, call it the 6,700 area level, then that probably means we are starting to form a low. But if we don't hold that level, I think we might actually see price discovery here at the 6,500 area. Either way, right, until we actually start to see verified momentum to the upside, I would still take this as a consolidation period. That being said, continue to buy this dip, because ultimately when you do zoom out, dip buyers have been rewarded this year, and I think dip buyers will continue to be rewarded, especially when you look at earnings. Later on in the video, we talk about the earnings picture in the S&P 500. Absolutely insane what's happening with earnings, and as long as earnings continues, I think this market will continue to move higher. The Nasdaq 100, very similar situation. You could see dip buyers did come in. That's a very strong wick at this key area where there's a lot of volume, but we do need to hold this area. If we do find support right here, we can then make our move up. If not, probably will go lower. Either way, lower prices means we get to buy the dip at a better price. And ultimately, the places I want to put money right now is something like Iris Energy, ticker symbol IREN. I think anything here at the 60 mark is a great buying opportunity. I think this is the $100 stock in 2026. Another one I do like is Cypher Mining. It does exactly what Iris Energy does, which is just a competitor to CoreWeave, but they own the land and their power supply. They were Bitcoin miners. They're more inclusive than CoreWeave, more asset heavy. But I do think you want to own the land, the power generation, the entire AI vehicle in something like this. You don't want to be asset light like CoreWeave, in my personal opinion. Cypher Energy is another one, trades at about $20. So these have had a pretty big rally. You can see that they are actually consolidating at the highs right here. But once they've consolidated this big move, I do think they probably will go high. So those are the two names that I really do like. In terms of the energy space, EOSE, this was an absolute gun. Now I have $10 cash secured puts. They're going to expire worthless, which is good. They expired this upcoming week, but I really wanted to get a sign because this is an absolute, look at this candle, 19% today. Absolutely insane move we saw right here. So this stock was sort of like trading in this like downward sloping trend. It broke above. I think ultimately what's going to happen next is we probably are going to see a little bit of consolidation of this move and then continue to move higher, putting in a higher low. This company already reported earnings. This is probably a $22 stock in the making. So these are names that I would look at right now. Another one, if you really want to get, if you just want the biggest name for your portfolio, go ahead, just look at CoreWeave, CRWV. Do be aware that they report their earnings on Monday. So it does look like we are going into this earnings with sentiment in the dumps near the lows where it bounced at 86, but we'll see what earnings bring. I think you probably want to see something along the lines of a $65 billion revenue backlog. If you see this number or higher, I think the stock moves significantly higher from where it is right now. Anything below 65, and I think we probably go see the lows here at the $65 area for CoreWeave. Now, if you want to diversify away from the AI trade, I think a stock that I've been bullish, and if you go back in my videos, I was saying to buy this stock at around this level right here, the $47, $50 area. The stock is now $75, and I do think it's going to go higher. I think cash secured puts here at the $62 area. Great buy, great area if you do get assigned. If not, collect the premium. I think the stock is probably $100 stock in 2026. So that's where I would keep my money. Obviously, I do like the S&P 500. I do like the Nasdaq 100, and I'm also bullish on crypto as a whole. Now, you can see a Bitcoin, right? So this is the Saturday price action. You can see that on Friday, Bitcoin was actually up 1.97%. But if you actually measure it from peak to trough, it was absolutely insane move. It was like 3% move here in the crypto space. Down here over the weekend, and I do think we're going to continue to see that. I think we're just going to probably chop inside this range, and then we'll see what happens on Monday. That being said, Bitcoin continues to hold this 103,000 area. This is a very, very key and critical support level. In fact, we should probably make this like some form of a rectangle, probably do something like that. That is probably the level between 103 and 102, maybe even the 100,000 mark. You could go ahead and make the case for something like that. But as long as Bitcoin holds this key level right here, I do think we probably do go higher. However, if we start breaking down, that's where things can get ugly. Now, Ethereum has broken down, as you can see right here. That key level was this area right here. And I think if we are looking to buy Ethereum, it's probably going to be at this level right here, the 2750 level. On a peak to trough, a move down, if we take a measurement, let's say from here, let's call it to the midpoint, looking at a 44% move. But let's say you start by here at the midpoint, right? And then we go back to all-time highs. That's an 80% move to the upside. Can we get there? For sure. 100%. I don't believe it. I think we do see 6,000 Ethereum sooner rather than later. That being said, let's wait for one more flush, one more liquidity grab here in Ethereum, and then we make our next move onward and upward from there for Ethereum to all-time highs. Super bullish on both of these assets. Now, quickly, let's look at gold. Gold is looking like it's forming a bottom right here. I think we're just going to continue to see consolidations, very similar to what we saw right here. We're just going to see consolidation and then the next move to the upside or downside for gold. I still favor gold to continue to move higher. If we actually go ahead and look at the futures price, right, you see right now we're sitting at about the 4,000 gold. I wouldn't be surprised to see 5,000 gold in 2026. I think yields are going to continue to probably trade sideways / lower as we continue to get rate cuts. I think we're going to see strength continue to move in the dollar, and volatility now at 19. You see, we did have a little bit of a volatility spike. I think we're going to continue to see this compress, especially if we start getting news like there's an end to the government shutdown, there's a deal, earnings continue to improve the way they have, and the economic data continues to come in strong. But that's the big thing. We don't know about the economic data. And that's another thing. We haven't gotten that economic data, and things can take a turn for the worst if we do get really, really poor data. And there's some very concerning stuff in the labor market. That being said, I remain constructively bullish simply because of earnings and the AI trade where mega caps continue to spend. We need to lean into these names and continue the move higher. And quickly, guys, before we go, I just want to talk about two names that I added to my portfolio on Friday. One of them is Open Door Technology. I added here at about the $6 level. I sold $7 cash secure puts as well. Going to collect some premium. I think this is probably going to go back to its all-time highs and even higher in 2026. You can definitely see there was massive capitulation right here. And this area right here, this $5.30 area, $5.50 area is probably the lows right now. And I think if we do get back here, that's probably where you want to load up. And one I do like, in fact, I like this name much better than Open Door Technology, right? Better Home Financing Company. I added, right here, I added at the $60 area. I did a pre-market order, got in at 60. So I am down on this position ever so slightly, got to as low as 52. But again, very small position, holding this position. I do think this stock is going to go significantly higher in the future. I think we're going to go see all-time highs, and they report their earnings, I believe, this upcoming week. Now, guys, diving into sentiment, we continue to be here in the extreme fear zone, kind of on the edge between extreme fear and fear, but ultimately the market's saying, hey, there's a lot of angst. The movement we saw on the week, it was a terrible week for the market, and that movement we saw on the week is telling us that investors are a little bit anxious with regards to price. That being said, this is the opportunity where we do want to buy, and if we continue to push into extreme fear, we want to be buyers, because we do know that this Q4 rally could be underway at any moment, and the government shutdown literally at any moment. Once that gets released, I think stocks are going to move back to all-time highs. That is the most near-term catalyst right now. I think also you want to be looking at the earnings picture. And guys, things are actually kind of crazy. In fact, so surreal, I don't even believe it. Look at this right here. Earnings estimates at the start of earnings season, at the start of Q3 earnings season, which was the 1st of October, right? 8.6%. That is what the average analyst was expecting. We're reporting right now 16.8% earnings growth, nearly double 17.8% if you actually just exclude the energy sector, right? Every single sector is gaining in revenue and earnings and grew margins except for the energy sector. So very good stuff. 8.1% revenue growth versus the 5.7% expectation. 82% of companies beating the analyst expectation, and growth is not just in tech, it's also in real estate, industrials, materials, financial services, comm services, right? So what we're seeing right here is growth in all of the sectors, and margins actually improved from 3.1 to 3.3%. Absolutely insane. These two should actually be flipped. Margins are 13.3%. At 3.1% was the estimate at the 10th of the 1st. So absolutely insane stuff when you look at the earnings picture. And the truth of the matter is, like 64% of companies are beating the analyst expectation. We actually know that this number is closer to 84% here or Q4. So this data is a tad outdated. So this figure, right, would actually be closer to like here. And this would be some of the highest beat rate we've ever seen in the S&P 500. Only about 10% of companies are actually missing the analyst estimate. So this is why I think stocks are still a buy right now. I think we're going to see a stellar Q4 as well in terms of earnings. And then 2026, we'll see what we bring. Now, diving into the macro, we do have to talk about some of the risks. Now, this was a chart that was going on saying that layoffs for October, these were challenger job cuts, were some of the highest we've ever seen, right, going back to the year 2000. But I want to pair this with some other data we saw. Everyone was focused on the layoffs, but yesterday's report, everybody missed the hiring plan announcements. And look at the hiring plan announcements, some of the highest we've seen in a very, very long while, like absolutely a big move up. So we are seeing layoffs, but we also are seeing hiring plan announcements. And then also this figure right here, federal employment tax receipts, so this number was actually negative at the start of November, right? It's now back to positive at about 3.4%. So this is telling us that the labor market is holding in there at the current moment. And when we aggregate the data, things are looking all right. The labor markets are falling apart. It's not super great as well. It's still a low fire, low hire, tight labor market. Now, with regards to data for the rest of the week, the big data prints are going to come on Thursday and Friday. We're looking at the inflation numbers, CPI. We're going to get those, and then PPI on Friday along with the retail sales. We'll see if we actually get this data. I mean, I do think we could potentially see the government reopen sometime this week. I mean, just, you know, the Democrats need to come to the aisle, and the Republicans need to come to the aisle. If we get that, see this data open, we can get the data release, and then onward and upward for the market. Now, with regards to earnings, a lot of the big names are going to be reporting here on Monday. So CoreWeave, off of the close, Rocket Lab, AST, Space Mobile, those are big names that are reporting. Okay, before the open, we have Monday.com as well as Instacart. So those are the real big names. We have Nebius here before the open on Tuesday, right? And then we also have Oklo after the close. Circle Internet Group is reporting before the open, and Cisco and Serve Robotics after the close. So those are the big names there. Before the open here on Thursday, Disney, BITF is reporting its earnings, SBET as well. Okay, so they're reporting their earnings, and then we have Applied Materials and Nubank after the close. And then that's pretty much it. Bit digital. So a lot of like these Bitcoin mining companies reporting, and data center names reporting here, Hive as well, QUBT. So it's gonna be a big week for earnings, not in terms of market cap, but definitely in, you know, the AI space for sure. I think you're going to see a lot of movement right there, as well as in the Bitcoin treasury and crypto space. A lot of these companies reporting them. Brookfield, I missed that on Thursday, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.